This is a potential week of a week of potential lot of catalysts out there. Ryan, what exactly is going to stand out to you about what ticks the market either higher or lower from these current levels?
Yeah, Dom, thank you for having me. Good morning, everybody. So I think what's fascinating about this month specifically so far, Dom, the first half of July is usually really strong. Check that off. The third week of July is usually weak. Check that off. Now here we are at the end of July, which is usually pretty strong. But I want to touch on one thing you mentioned at the top of the show. You said last week was mixed overall, and it was if you just looked at the headlines. But Dom, last week, 437 stocks on the S&P were higher last week, right? Even though it lost about 1%. Why is that? Well, we all know, right? The large cap tech and communications have been pulling things back. I think this overall, I know a lot of guests have said it, including me, this overall rotation is really a positive thing. We are seeing a lot of groups that are doing well. Look at small cap technology. That's doing just fine, right? So I think that's what stands out to us. And there's a lot of news this week. Like we can get into some of that stuff, but just the underlying pinnings, Dom, of this bull market, we've been bullish for a while. I've not seen any major cracks. And we think, one more thing on this, August usually is not that great of a month. Look at election years. And election years are pretty strong. So I'm not so sure this rally that started in May, Dom, is quite over yet. Might have a little bit of juice left to it. Then the normal August volatility ahead of an election is probably likely.
But you brought up the point. It is maybe call it 5 to the magnificent 7, maybe 10 stocks overall in the market that really determine the direction. And many of those names are going to report their results this week. What we saw last week was that, these big tech names maybe don't have enough in the tank to power the market higher. We saw what happened with Alphabet. We saw what happened with Tesla. Yep. Can we expect the same with the other ones this week?
Yeah, wouldn't be surprised. I mean, the bar is set extremely high for those names, and they've had so much spectacular earnings overall and justified. But I don't think that's a bad thing, right? I mean, for the longest time, everyone complained only 7 stocks going up. It was never only 7 stocks. Lots of other stocks were going up. They were just going up more. And now people are like, oh, my big cap tech's not doing quite as well. But again, that doesn't mean you have to be wildly overweight large cap tech. You can look at some other areas. Again, I mean, I love the example of 3M last week, right? I know you talked about it on the network, but up 20%. 3M is selling things, right? It's not just about AI all the time. There are some major positive things taking place here. And that's why I think you mentioned this week what we're looking at. Sure, we're watching the big tech names, but just what's happening overall with other consumer companies and industrials and financials. One thing, Dom, I don't think anyone's talking about this. Regional banks are up 20% this month. I mean, I just don't think that's Mr. Market's way of saying there's this big, monster under the bed when you see that much strength out of a group like regional banks. I think that's a pretty darn good sign.
How much of that, Ryan, and not just some of the blue chip names like 3M, which to a lesser degree is indicative, but of that small cap and even regional bank trade that you were talking about, is due to just this idea that there have been so many bets against them right now that people are rushing in to close out those short positions, and that there's not enough of this momentum to keep things going to the upside, fundamentally speaking.
No, that's a great point. I mean, clearly we got lopsided, right? 4 weeks ago, nobody wanted to own small caps. Now we've seen the run they've had. We've been overweight small caps most of this year, small and mid caps for that matter, because we thought inflation was going to get better. We thought we'd start to see some rate cuts, and we think that's likely. We think 3 to maybe even 4 rate cuts is possible this year. But you mentioned, can this rally continue? Well, when you look at small caps relative to large caps on a valuation basis, it is historically cheap, just to keep it simple. And then now with this bounce, could it keep going? Listen, we think it can, Dom. We had a over 11% bounce on the Russell 2 those first 5 days this rally started after that CPI a few weeks ago. What in the world does that mean? I looked. When you have at least a 10% bounce in 5 days, that's a buying thrust, an incredible pressure of buying. Historically, going out a year, you're up like almost 90% of the time, higher 27% on average. We can get into more stats and things, but to keep it like this, I think that beach ball is way under the water. You let go of it, it starts to get a lot of momentum. I think that's what's happening with small and mid cap. So we absolutely think the second half of this year, they're still going to lead the overall market, even though they've had a historic run the last few weeks.